I think actually markets were set up for a decent rally into year-end, irrespective of necessarily who won. A few reasons for that. One is the economic data has been incredibly impressive, and the employment data for last month, also blew out expectations. Secondly, the rally in government bond yields over the last week, I think, has put a big floor under global equities. That essentially is saying that we're going to get a sort of divided Congress, which is generally quite good for the S&P and decent for global equities. And last but not least, I think it removes a lot of the idiosyncratic risk for trade relations with China. Biden is seen as a much more pragmatic leader and much more on the sort of erring towards multilateral decisions for dealing with China versus the sort of unilateral prognosis that Trump had taken over his presidency.
Sean, that all may be true in terms of Biden's approach to China, going the multilateral route, but we've already heard comments from those close to his campaign that they don't intend to give up on human rights issues for the sake of trade deals. This is something we've heard from both Kamala Harris and Biden when it comes to their concern about human rights issues out of China as well. And this may not go over well in Beijing. I mean, on top of that, we have yet to hear an official congratulations from President Xi. What do you make of this?
Well, I think at the moment, until President Trump concedes that he lost, I don't think necessarily all the leaders are going to embark on best wishes for President Biden. The second thing is that the multilateral approach by Biden towards China is unlikely to mean blanket tariffs. And I think that was the big downside for the global economy in the past 2.5 years. The trade dispute between the United States and China sucked in everybody else, and global trade pretty much evaporated from 2018 up until early this year. So in some respects, the more targeted approach by the Department of Commerce on certain areas that the United States wants to either introduce measures to contain China's expansion or indeed as a way of controlling some of the elements in China that they don't particularly like would probably be actually much better for equity markets. So all in all, I think there's been a large removal of uncertainty for global investors towards China. And as I said, perhaps in the first instance, Mr. Biden or President Biden is going to have a lot of work to do domestically, and necessarily worrying about China trade isn't going to be on the cards until until the phase one trade deal has to be either renewed or other talks have to be instigated.